The principle is when we are dealing with foreign exchange, you buy one currency and in terms of another. So you buy the dollar in terms of the yen. So you're buying the dollars and selling the yen, and with the receipts or the revenues from the sale, you're going to buy the dollar, and or you're going to buy the euro and sell the dollar. Whatever, you're buying one currency and selling the other. And what we're trying to do is identify the strongest currencies, so that will be the ones that we are going to buy and continue holding it on the long side. And we're also looking to short the weakest currencies, because they are the ones that are going to continue declining. The principle is we buy strength and we sell weakness. So with that, we're going to look at first at the basket of the currencies. We're going to look at the indices, and these indexes are a basket of currencies against all the others. So for example, looking here at the dollar index, so this is the basket for the dollar versus all the other currencies. Now, as you recall from last week, we were initially, the trade was to buy the dollar on a trade above the 81, the 80.83. That was the bias. We're going to take the long on a trade above 80.83, and we were looking for a test of the other structural point, which is the 81.03. So we were looking for this move to break above the 81.03, and we were looking for a continuation, hopefully towards the 84 level. What happened is quite interesting, is that we did have the break to the upside above the 80.39, and we pushed higher. We went above the 81.83, but we were unable to hold for the last 3 days of last week, which is Wednesday, Thursday, and Friday. We really had about a 200 pip decline to the downside. So our trade would have been taking the buy above 80.39, and we should have exited again below, and when the prices comes back to the 80.39 to our entry point, because what gets us in gets us out, and we could have reversed quite easily at the 80.39, and we are now short the US dollar. Having said that, the basic trend for the dollar from November is to the upside. We have started around 74, and we have pushed all the way to 81 or close to 82, and we have just corrected back to the 79.40. So as of now, this is weak currency, and we're looking, the dollar looks extremely weak, and we are looking for it to continue to decline to test the 78.77. And we will also pinpoint a what if, but right now the way we see that, the dollar is quite weak. It is correcting, and the extent of the correction is fairly strong. The second currency which was reacting this week was the euro. And if you look at the weekly euro, you will see that also the plan was that we are going to continue the short pass move in the euro below the 103, 1.3328. We did open below that, and we sold off to the 1.3, so about 300 pips to the downside, only to reverse and come back above the structure point, which is the 1.33. So in this case, you had two very successful trades in the euro. You could have gone short from last week at the starting point, and then you could have reversed again on a trade back above the 133.28. This close on the week lead in the euro is quite interesting. It's a good close, and we should be looking for a continuation to the upside. You had 3 days to the upside, and it is quite a reasonable close. It is a close that indicate continuation. So the euro is closed, the dollar the strong, the dollar is weak. If you look at the Aussie dollar, again, that is a very nice close. It looks again that it wants to continue. So the Aussie is strong, the euro is strong, the Canadian is strong. But look at the Canadian here. That is the first sign that the Canadian, or the move in the Canadian that we had on Friday, was not a successful move. If you're the guys that were taking the course today, where Michael Douglas were talking to you about the close at the high of the day, that would be the sign of a reversal. That is the second sign, because that is a dangerous close. So if you look at the British pound, you see that the British pound came back above the 156 after selling off. So starting of the week, you had your sale below the 156, only to reverse on Friday and come back and close above the 157.80. So what we're having right now is an interesting move. What's happening is we had a major decline in the dollar on Friday as a result of the unemployment numbers, and we had the big sell-off in the dollar, and therefore you see the big buying that's coming, or short covering that's coming into the pound. You also see some short covering coming in to the Swiss franc. Pushing higher, and you see the same kind of move coming into the Japanese yen. So all of this is again indicative that the dollar is weak and all the other crosses are strong. With that, keeping in mind that we had a news event on Friday, so what we need to do is that we are going to be looking at buying the strongest of the currencies. So let's see which is strongest. This is the yen. This is the yen. We can look and see the Australian dollar. And I want you to choose which is the strongest. This is the Canadian. So we did the Swiss, we did the yen. This is the British pound. Okay, and this is the euro. The common denominator is that the dollar is weak, so we're looking to be selling the dollar, and we're looking to be buying one of the strong currencies. So the euro, as you see here, is moving to the upside, and that exactly, Luis, the dollar is the strongest, the Aussie is the strongest. The euro, yes, the Aussie, we agreed, is strong. The Swiss is also strong. Let me put the Swiss. No, the pound, Andrea, the pound is, and the euro, they are basically short covering rally. This is just, you had only Friday in the pound that's moving up, and the Canadian, actually on Friday it actually came down, so that's not, the Canadian is off the table. The pound, we only had one day up, which is Friday, even though with the 4-day declines in the dollar, the 4-day declines in the look at the US dollar, you had 3-4 days decline, but in the British pound you only had 1 day moving up. So even though the dollar was selling off for 3-4 days, you had only 1 day that bounced, the pound bounced above the structure point, and that means that it is weak, structurally weak, and that day is short covering rally. It is not a genuine buy, it's just short covering, it's a knee jerk. And the same thing with the euro, because we had a tremendous move to the downside, and now we bounced above after the news has settled down. So this also might be a knee jerk, but it is stronger than the pound. So in our choice, we're going to be looking at buying the Australian dollar first, then we're looking at buying the Swiss franc, the Japanese yen, and then the euro. Last of the pairs that we're going to look at buying is the British pound, and the Canadian we're going to step aside and let it be. And we're looking at the common denominator is to be selling, and we'll also be looking at buying the Swiss. The common denominator that we're selling is the US dollar. Also, if you look at, this is the Swiss, I want you to see the big move that we had. Now we also have the commodity currencies, just to confirm which ones we want to be buyers of. So for example, if you look at the Australian, you know that they have gold, they have precious metals, and they have wheat. These are all in demand, and the more you have demand in these, the more the powerful this currency. So look now, for example, at the wheat. You can see the push, the strength that's coming this 3 days to the upside in wheat is very much like the 3 days that we had in the Australian, because there is positive correlation between them. You can also see gold. It has closed at 114.16. There is the gold again. Is a absolutely Matthew, absolutely. There is your gold, and also there is your copper. It's already above $4 a pound. All of these are supportive of the Aussie. So we have commodities moving higher. The commodity currency is supporting for the copper, gold, and the grains. That is supportive of the Australian. So the Australian is the number one we're looking to be buyers of. And of course, we're looking at shorting the US dollar. Okay? So the sequence is 1, buy Aussie, 2, buying the Swiss, 3, we're looking at buying the euro, and the Japanese yen at the same. Last buyer will be the British pound, and we're looking at the common denominator of selling against those is the US dollar. All right?